Welcome back. Today, we're diving into one of the most extraordinary events in recent stock market history, the GameStop saga and the role of the WallStreetBets community on Reddit. This is a story of how a group of retail investors took on Wall Street and caused a massive disruption in the stock market. In January 2021, GameStop, a struggling video game retailer, became the center of a financial frenzy. The company's stock price skyrocketed from around $20 to nearly $500 in a matter of weeks. But how did this happen? It all started on a subreddit called WallStreetBets, where retail investors gathered to discuss high-risk trades and investment strategies. One user, known as deepf***ing value, noticed that GameStop was heavily shorted by hedge funds. Short selling is a strategy where investors borrow shares of a stock and sell them, hoping to buy them back at a lower price and pocket the difference. However, if the stock price rises, short sellers can face unlimited losses. deepf***ing value believed that GameStop was undervalued and that the high short interest presented an opportunity for a short squeeze. A short squeeze occurs when short sellers are forced to buy back shares to cover their positions, driving the stock price even higher. He shared his analysis on WallStreetBets, and the community rallied behind the idea. As more retail investors bought GameStop shares, the stock price began to rise. This created a feedback loop, attracting even more buyers and putting pressure on short sellers. Hedge funds that had bet against GameStop, like Melvin Capital, suffered massive losses. Melvin Capital reportedly lost over $4.5 billion in January 2021 alone. The GameStop frenzy caught the attention of the media and regulators. It highlighted the power of retail investors and the influence of social media on the stock market. The event also raised questions about market manipulation, the role of hedge funds, and the fairness of the financial system. One of the most controversial aspects of the saga was the decision by trading platforms like Robinhood to restrict trading in GameStop and other heavily shorted stocks. This move was seen by many as an attempt to protect hedge funds at the expense of retail investors. Robinhood faced backlash and multiple lawsuits as a result. The GameStop saga had a significant impact on the stock market. It demonstrated the potential for retail investors to move markets and challenge institutional investors. It also led to increased scrutiny of short-selling practices and the role of social media in trading. In the aftermath, GameStop's stock price eventually fell from its peak, but the company managed to raise capital and restructure its business. The WallStreetBets community continued to grow, and the event inspired a new wave of retail investors to enter the market. The GameStop saga is a testament to the power of collective action and the changing dynamics of the stock market. It showed that with the right information and a strong community, retail investors can take on Wall Street and make a significant impact. Thanks for watching. If you enjoyed this video, don't forget to like, subscribe, and hit the bell icon for